Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market, and I'm your host, Kevin Horner. Pleased to be joined this morning by my friend and fellow coach, Brent Moores. Good morning, Brent. How you doing today?
Doing great, Kevin. Looking forward to talking to you. Looking forward to looking at the markets again.
Heck yeah, we actually had a little different day yesterday, didn't we? We had red on the screen. I'm not used to that.
What is that color?
So we're gonna talk a bit about that. That makes the market a little bit more interesting for us, of course, when we get brief pullbacks as they might be. But we'll talk about some levels that we may need to be paying attention to here. Of course, say hi to Barb Armstrong in the chat. She'll make sure that things are good to go for all of you. Answer questions and comments that Brent and I are unable to get to, but we are happy to hear from you. Please feel free to post in there for the duration of the show. We're going to go about 45 minutes in total. Follow the three of us on X if you're not already doing so. Kevin Horner, CS, Brent Moore, CS, and Barbara Armstrong, CS. A great way to follow and engage with us beyond the classes that we offer for you here on the channel. So with that, let's get to our disclosures and we can dive right on in. So please remember that our discussion here is exclusively for your information and your education. Remember, we do not make recommendations. We do not make endorsements for a specific approach to trading the market. It's important to remember that technical analysis is merely a piece of the decision-making puzzle. We discourage you from making decisions exclusively based off technical analysis. In terms of our agenda, we will follow our standard agenda, everyone. We're going to go with our top-down methodology here, meaning simply we're going to look at the major indices. So we'll look at the S&P 500, the NASDAQ 100, and the Russell 2000. We'll look at semiconductors as well. And then we're going to work our way through sectors on the move and stocks in the news. This morning, we've got a few in the news for some upgrades and some potential downgrades as well. So we're just going to touch on what we can in the way of headlines for all of you. So with that, let's get to it. So Brent, we always start with the S&P. And yesterday, when I looked at that candle, I was reminded that, yeah, we may need to pay attention. If we made the new high any of the last 3 days, basically, our close yesterday was more or less at our lows of the last 3 days as well. Today, it starts to resemble a little more of consolidation than it does, but than it did yesterday. But when we get these bouts of weakness on the heels of next to no weakness at all, it starts to stand out a little bit, doesn't it?
Yeah, I think you can see that in that RSI down at the bottom of the page as well, because we're still hovering. Yeah, yes, it's declined from its high. Of course, typically they don't stay above 70 for a super extended period of time, although sometimes it'll stay up there. But the fact that we've been above the 60 on that RSI for the better part of, you could probably scroll back to mid-April or so, late April, is where we really kind of shot up. Mm-hmm. That's just showing strength there. We're hovering near the 70 level though. So that's more indicative of a little bit of a pullback. And, like if we're looking at the last 3-4 days to see if we can maintain that little low, I mean, that's a pretty high standard there of pullback to see if we can maintain the 3-day, above the 3-day low price there. We're still well above that 20-day moving average. The trend, we've said it before, it's like the Energizer Bunny, it just keeps going. We have these little pullbacks, but yeah, and you know what? Eventually the Energizer Bunny will run out of batteries, even if the commercial doesn't depict that. And so I don't know when that's going to be, but as for now, it's continuing to go up. And, we'll see if we can maintain that little short-term low. But right now, today we got off to a decent enough start that it looks like it's on track to do so.
Yeah, I think what you're ultimately stating is a lot of what many of us have been suggesting. let's continue to monitor the trend. And when I say suggesting, let's just not get ahead of ourselves, and let's also not decide to dive out of the market opportunities when a little bit of weakness comes in here. We can see that our tests of the 20-day have actually been opportunities to join the trend, not to dive out of the trend. So if we're disciplined traders along the way, we really haven't had a whole lot of reason to move off of the trend that's been in place since mid to late April here, right around April 23rd when we first caught that 20-day moving average, as many of you know. So many of you who are here frequently will also be capable of echoing my standard sentiments. Have a plan, know what you want to do, where will you make a choice to maybe reduce risk, where would you be comfortable in adding risk. Those types of things are a good way to be thinking about the market at all times so that you're prepared, ready to act if the need and opportunity presents itself. We don't know just how long this can go. Brent, I got one question for you as it relates to the trend, though. You know, we are looking at that 20-day for so long. We've only had those 2 days below it, really. But is there concern when you think about like the steepness of the rise? I'm noting things like this. If I just start from when we captured the 20 and try and draw it like this, I mean, we're reaching a real literal apex, aren't we? I mean, is this something that a technician needs to pay attention to?
I think that's a good question, Kevin. It's an insightful question because very often I have said many, many times when looking at individual stocks, the steeper the rise, the less likely it's going to continue for that level. Now, the market seems to be proving me wrong, I guess, to a certain extent here and what we've seen. But yeah, generally, the steeper the rise, the more unrealistic it is to maintain that pace. Now, doesn't mean the trend can't go up. It means we could see a pace that doesn't continue at the rate as it does. So yeah, I mean, that's a valid point, Kevin. And I'm not exactly sure when we're going to end. I'm not sure if it's going to be a big news event. We've seen what seems to be some bad news events that have occurred over the past few months, and the market, will pull back for a couple days or something like that, and then just resume on its merry way. But at some point, things may change. I don't know if it's going to be one news event. I don't know if it's going to be an accumulation of multiple news events, and you just don't know what's the trigger is going to be. But right now, there's not enough. And when we look at these economic indicators, when they come out, we have Fed minutes coming out today, and we look at that. We have some earnings season coming out here in earnest next week, really. And it's typically not, what we've seen lately is, don't just look at one thing. We may have a poor labor report or something like that comes along, but it's not, you got to look at multiple data points on those type things.
Yeah, I think that's a good reminder. We might need a catalyst, and earnings season could bring it. We are having earnings tomorrow kind of get going a little bit this week. We're going to hear from Delta Airlines. We'll hear from Pepsi tomorrow as well. These are not huge. I mean, they're big companies in the grand scheme of things, but not in the space that has been driving us higher. Yeah. So one would wonder if those are catalyst opportunities. Perhaps it's more likely we go forward into next week where things do start to get going in earnest. By the way, I'm searching here under Market Watch and our calendar for the S&P 500 specifically. You've got Fastenal on Monday. We've got a series of big companies with whom you're familiar. Your BlackRock, Citigroup, Goldman Sachs, Johnson & Johnson, JP Morgan, Wells Fargo, etc. here on Tuesday. Some other familiar names on Wednesday, Thursday, Friday, all of these. So we are going to start to see some need from a data point standpoint, Brent, to maintain this trend. So the reminder that I'm going to offer you all, the reason that we have likely seen the rally we've seen is that analysts have been upping and elevating the expectation of earnings. So earnings expectations have been rising, and thus traders have been buying into stocks with these higher earnings expectations. Well, now that we have the actual reports, the market's going to want to see, can we validate this move that we've made through actual earnings numbers? Brent, What are your thoughts as it relates to thinking about earnings when we have this on the table?
Okay, the great point, Kevin. When we are worried about, say, market valuations, let's just go on the simple level of PE, price divided by earnings. People are worried about high valuations, that the price is getting frothy, the price is getting very high. Well, there's a couple ways to lower valuations. One is price could come down, and that's what we talk about. Another way is if earnings can increase, that can help keep valuations in check or not too far out of line or whatever. And so really what the markets like to see is if you listen to people, is why is the market continuing to go up? I think a very credible reason is the predictions for earnings have still been pretty strong for most companies. Now, there's exceptions, and exactly what's strong, and we can quibble over that. But really, earnings haven't taken a huge hit, it appears right now, and that's helping to lift the economy. So, we'll see. We'll get a lot of data points coming up here in the next few weeks. But as long as that earnings story continues to go pretty strong, it may help boost the market. Now, there's one other thing I want to say, Kev.
Please.
We talk about earnings as something that can drive the market. We talk about often these economic reports. There's other things as well. There's geopolitical events that can happen, and also in the chat, for example, Jim brought up earlier this First Brands bankruptcy. Well, concerns in the credit markets about that. Well, that's that's hitting Jefferies, I saw, to the extent of $200 million or something like that. And I don't want to be like I don't want to be alarmist or anything like that and make too much of it. But when we go back to the 2008 Great Recession, it was like, oh, a few chips kind of fall, a few dominoes fall, and then others come in to play. And so sometimes it's something like kind of out of left field in a sense, where you don't really see it as things happening. But right now, market strong, earnings season, we'll see what that tells us. But the trend, we've looked at the technical analysis, still going pretty strong. And you can see that on the NASDAQ as well there, Kevin.
You really can. And even still, little divergence in that RSI, little consolidation above the 20-day moving average, a little sharp move if we try to capture all of these lows again. I'm a trader who loves to draw lines. Drawing lines helps me understand the patterns I'm watching. This one's not quite as steep, oddly enough, Brent. I would have thought for sure that the NASDAQ chart would look a little more steep, but the channel in which the NASDAQ 100 resides is a little more standardized, I might suggest, but really strong above the 20-day. Really, the thing that stood out to me here has been the strength since we took out this little consolidation. We have barely even tested the 20 since then. Our lows have been in the vicinity of the 20-day, but not really at the 20-day. So again, if you're just simply sitting on your hands, trading the trend, not overthinking things, and just allowing the market to do what it does, you haven't had a whole lot of reason to reduce position size in the NASDAQ 100 along the way. Now, there is a bearish divergence here as well at this last high. And I'm always compelled, Brent, to remind ourselves and all traders that when we look at divergences, bearish or bullish, remember, they don't imply reversal of the existing trend. More often than not, the implication is a pause to the existing trend rather than reversal. So if it is in fact a pause could mean a test of the 20, pause could mean a test of the 50. Yeah. But Brent, if you were looking at this from the standpoint of someone who maybe has not yet deployed money to this area of the market, boy, that 50-day sure looks like what might be a comfortable spot for a new trader to join in and participate here.
Yeah, to your point on divergences, if you go back to late July, early August on this chart, we
Yeah.
have a divergence on there. The RSI is going down, lower highs on the RSI, higher highs on the NASDAQ. And what happened? Well, we paused, right? The market kind of went sideways for a little bit, and then it resumed itself. And, this is 100% hindsight right now. But if at that point in time, we took the attitude of, if we go down to that 50-day, or maybe down to the 50-day and showing a little bounce, that's the time I'm going to deploy some additional capital. That would have so far worked out fairly well for us. Now, I don't know if that's going to happen in the future, but that is an approach that you bring up there. That's a good reminder to everybody. Is a common trading approach is deploying capital on pullbacks there. Mm-hmm. So you do it that way too.
You sure can. Now, in terms of what we've been seeing out of the NASDAQ and what we have in the way of potential new money coming to the market, Zach's got a good question in here. How much big money is still sitting on the sidelines? I think this is a perfectly fair question to ask. If I was going to speculate, and that's one thing we try not to do here, the thing that I think that has been pervasive or part of the story here has been that the market's been moving higher largely with retail traders moving the market. And I say that not tongue-in-cheek in any way, but just as a point that a lot of the institutional investors, have not been believing in this most recent rally. Certainly in the last month or two, they're feeling as though it seems things are getting a little too hot in the way we've moved. And so what we may have been seeing here is a little bit of leadership from retail rather than institutional. Now, on an individual equity basis, you're absolutely going to find stocks with high volume that exceeds your average volume. For example, something like in excess of a 50-day average volume for an individual stock. That's generally not you and me driving that volume, right, Brent? That's likely institutional traders. But the impression that I've had is basically that institutions are kind of denying this rally. And you know what? That's okay for now. At some point, if that changed, well, then we would see an inflow of balance and dollars, and we could, in fact, continue pushing. But I think it remains to be seen. I think what a lot of traders would expect, Brent, as it relates to the major indices here, is that there needs to be a little bit of a pressure release in the broader indices that would bring us back to some levels where new dollars would feel comfortable deploying new money. Do you think that that's a fair assessment of kind of what's been going on of late?
I think that's an absolute fair assessment. And let me just add one little thing to that, Kevin, and that is, even in the midst of, say every dollar that investors have is fully deployed, what happens is they rotate, they shift into different allocations, different asset classes there over time. And so even if the market is pretty well bought up, you'll see different segments of the market likely continuing to do well, while others may do worse. So it's not just a matter of, hey, you get to a certain place in the market and then the market just doesn't do anything. Different aspects of the market will perform differently, which is why we talk about things like sector rotation and asset class, and why people allocate their portfolio in different ways. That's when we talk about diversification. Let me just go on a slight tangent here, Kevin.
Yeah.
When we talk about diversification, what we'll talk about is, well, look, I don't want to put all my money in one stock, right? Or just a few stocks or something like that. But there's a couple types of risk in the market, okay? There's systematic risk, or which is non-diversifiable, and then there's business risk, which you can diversify out of. And a company has a bad earnings, the company goes way down. If you're overly exposed to that one company, you could be in big trouble. But if you are well diversified and a company has a bad earnings and the market does fairly well, hey, the diversification really helps you. But what if the whole market goes down? What if the equity markets go down? Diversifying into different stocks has limitations in the amount it helps you in terms of portfolio protection. That's where asset allocation can come in and help, because if equities go down, it doesn't necessarily mean that bonds are going to go down, or precious metals are going to go down, or real estate or commodities are going to go down. So there are, just remember, there's multiple parts of the market, not just the equity market. We talk about the equity market here, but just realize there's parts of the market that we don't talk about that much, although we will talk about commodities and things like that. But that can help you if you are more concerned about pullbacks in the market.
Yeah, I think that's a really healthy reminder, to your point, Brent, that the process by which we traders address our trade portfolio, we manage risk through proper risk reward opportunities.
Yes.
Maybe the use of bracket orders, stop orders from a protective nature on your underlying trades. But that's vastly different if we're trading, if we're investors, right? If you're a long-term investor, you manage risk through, as Brent pointed out, diversification, allocation to the various groups of the market. We go top down, right? Large cap, small cap, and international plus bonds. And then if we're talking domestically, your US money needs to be spread amongst the 11 sectors. So you got to have a piece of all of them. Even though tech is leading, you still need to have some utilities or real estate and some financials and industrials and so on at proper allocations. But the reminder needs to be, as I see it, that the market doesn't give us positive returns. No matter what we've seen over the last 3 years, Brent, the market doesn't give us positive returns every step of the way. And so if you're an investor taking on a long-term viewpoint and say the broad S&P 500 has a year where it loses, say, 5%, and you manage to lose a little bit less than that, hey, that's a good year, right? It's a challenge to think like that because we've been kind of seemingly trained to believe that we're going to get subsequent, and if not consecutive or 3 years in a row of 20% plus S&P 500 returns. Those are anomalies, generally speaking, as opposed to more of a grinded market, I would think. So it's hard to remember those things in the midst of really good bullish markets, but I'm bringing it up because not everyone has participated in those difficult market maneuvers. But we say things all the time, Brent, like, the market will, you can find a bull market somewhere all the time, and that's entirely true. You can find a bear market somewhere within the broader indices all the time as well. So if you're trading, you just go where the trade opportunities reside. That's very different, though, than the long-term investor approach. So I want to make sure that we kind of get that point laid out, because if you're finding yourself saying things like, I like the show, but you guys are way too granular, or are paying attention on a day-to-day basis is beyond my comfort, well, then you might find yourself to be a little bit more of an investor than a trader. And there's absolutely nothing wrong with that. Okay, so a couple of key points I wanted to bring to the table there. Now, you're right. Ocean life, government shutdown, high tariffs, rough labor market. What is there to be worried about? There's obviously a lot to be worried about, and the market continues to climb this wall of worry. And then we had a question, Brent, about key signals that we could see that would let us know that institutions are actually selling investments and moving out of their longer held positions. Brent, one of those things really is volume, but volume at resistance zones, I think, is one of the things that some traders pay attention to on an individual equity basis. Meaning, if you had a stock that's in a good rally and it starts to not make new highs and starts to consolidate sideways, but as it's doing so, Brent, we're seeing big volume. That could tell us that we're in a distribution phase where those institutional investors are unloading large positions. Remember, if you're an institutional investor, you've got a very deep book of lots and lots of shares held. You need buyers willing to take those shares from you, right? In order for you to unload stock that you may have held for 3, 5, 10 years. So we need retailers to be participating. And so, Brent, we've been participating for a long time now, going back, say, 6 months solid, right? So if institutions were feeling like they needed to start moving for the exits. Well, they actually have the liquidity as we speak to do just that, don't they?
Yeah, they do. And sometimes we'll look at we can't just say what's the volume on the RUT, Russell 2000, for example,
Right.
or the S&P 500 directly, because hey, it's an index. Technically, it doesn't have a volume. What a lot of people will do, and I can't give you specific symbols today, everybody, or whatever, but you can look at ETFs, for example, on volumes, and there's other ways to look at volumes on these. And of course, we look at price action here, and if selling volume starts to increase, generally you're going to see that as well reflected on the charts. Haven't seen that a lot at this point here, but small caps, again, we have a chart of small caps holding that 20-day right now.
Right now, yes. Again, small caps hanging in pretty well. Likely tied to the continual struggle here in yields. Yields not really kicking the downtrend here. As you can see, we bounced into this band that I drew in on yield, and it looks like we got rejected there. Now, we're above or fighting it out of the 20-day, so this is a current higher low in yields, and that might be changing things a little bit. But that's kind of notable. If we were to see yields break the downtrend line here, get back above 4.2, I think you'd see that as a headwind for small caps. Do you agree?
I agree with that, but I think it's a reminder of don't overreact to a few days data. We talked about this, Kevin, a couple weeks ago, Kevin, I remember, when the yield started to jump up a little bit, and this was right after, I think, the rate cut we had on the Fed funds rate. We were saying, hey, look, it's that, don't worry about the little blip up, worry about the general trend. And you have that general trend on that diagonal white dashed line going down. That's kind of a key level. Now, at some point, that, if you extend that out far enough, it goes to zero. At some point, that's going to break. But the other key point I would say is, yes, exactly, that kind of orange horizontal line where we were kind of picking up a low there. Because remember, yields are the inverse of the price. Okay, so when you go, well, it's kind of weird to do support and resistance on yields. I agree, maybe it's a little bit strange to do that, but if you think of it as the price, then every support is a resistance, every resistance is a support on a price chart of this.
That's also true.
That's where it kind of, I think, makes sense in terms of support and resistance levels, and where you can think of it more in terms of a supply and demand thing. When yields go up, there maybe more demand for bonds, and because bonds are cheaper at that point. And when yields drop, maybe less demand on bonds. Why? Because that means bond prices have gone up in price there. So just kind of think of it that way in terms of overall yields and bond prices.
Yeah, helpful to understand the relationships between bonds and equities and the groups that move. It can be a helpful way to maybe set your if-then statements, right? If yields were to climb back above 4.2, then some traders might sell some of their small cap positions, for example. That's just a generic example. That is not a suggestion, of course. Okay, Brent, I wanted to speak to a couple of questions in the queue about commodities here. Questions on, now we're going to use the future symbols, but we're not going to do this from a standpoint of encouraging futures review, and we're certainly not doing so from an analysis standpoint, but just from a trend basis. I wanted to look at gold, which continues to move higher following a 20-day moving average since a breakout. And you could say something similar about the move in silver here, Brent, as we have made a range break that had led to a new trend developing, a 20-day moving average rising as well. Now, just a quick, put in your mind, everyone, these last two charts, and then look at the movement in the dollar here, which I think is partially responsible for the moves we've seen in these precious metals. Now, Brent, it is possibly notable today that the dollar is moving through a resistance band. Could this spell perhaps a little profit taking in precious metals?
It could. Now, look, we had a strong downtrend in the dollar and for quite a while, and now lately we've been kind of more channeling sideways. Hey, the trend in gold, for example, the trend in silver still continued up during that time. You would expect, if the dollar strengthens, I think, that would put some downward pressure on commodities. But as with any correlation, when we talk about the intermarket analysis, and if the dollar does this, then commodities do this, typically inverse. Or if bonds do this and stocks do this, or, there's these intermarket relationships we can talk about. You always have to not speak in absolutes, because anytime we look at things like that, it seems like there's exceptions if you look back in history. And a lot of times people come up with these and they say, it's this way. And you look back, and half the time in history, it really hasn't worked out that way. In this case, in general, I would say, if the dollar strengthens, you're going to see some weakening in commodities. Wouldn't guarantee it, though, because there's periods of time where that hasn't been the case.
It's the truth. And yeah, I think there's been a rise in those precious metals tied to the fall of the dollar, tied to the concern of inflation. And I think that all of that broadly makes sense. If you've been simply trading the prices of these commodities, again, you've had very limited excuse or reasons for reduction of your position size as the trends continue upward. So as usual, I'll remind you, as a trader, you need to know who you are. Are you a trader that's comfortable and prefers to sell into strength, trying to capitalize on those upside moves? Or are you a trader rather who prefers to sell when weakness comes into the positions, when you break a trend, right? Can you give up some of that upside for the opportunity to potentially stay invested until the trend truly breaks? Not every trader wants to give up any of those profits. Some of you want to simply sell as much as you can along the way as it's continuing to rise, preferring to take a little bit off as that strength comes into the position. So just know who you are. That's the reminder I want to offer there. Now, let's make sure, Brent, we get to some stocks in the news. I realize we've had a bit more of a broad conversation than we usually would here today. So let's get to some of these stocks in the news. We've got an upgrade call for a company that had a big report or a big heads up this week. AMD has made a strong move to the upside here. We had a big break. As you can see, not just a big break, but a gap and go so far where the gap ledge has been maintained. AMD was upgraded to buy from hold at DBS Bank. So that's a new target at 260, and upgraded at DZ Bank to buy from hold with a new target at 250. Neither of those are guarantees to be achieved, but from a standpoint of what's been occurred here, Brent, what has just happened, this seems like a big spot, doesn't it? From that weekly chart, that kind of looks
absolutely. And when you're looking at, again, from a trader perspective, when you have a gap up, the kind of the low part of that gap, what you want to see is it, if you're a bull, I guess, you want to see it hold the low part of that gap. And that could be considered support. When that coincides with other potential support levels, which would be an old resistance or something like that, then that would add credibility, I guess, to that support level there on that.
Yeah, what I think stands out from just the structure of this is the strength after the downtrend broke.
Yep.
So straight up, basically, then the throwback. Throwback came to a strong area of support. Notice the tails coming into play right along the 20-week moving average in green, and now you've held that, and then you had the explosion to the upside. If I extended this support level to the left, you're going to see that it captures essentially that one weekly high candle that looks like what was a shooting star, which was kind of the heads up that initial trend had run its course. And then we made a substantial drawdown. So, I mean, we made a healthy pullback there of about 66% from the peak to trough. That's pretty notable. And yet we're right back and now at new highs. So Pretty incredible move here by AMD. And granted, that's news driven. That's all tied to their agreements here. But nonetheless, a very significant development. I'm going to remind you, looks like we have a survey in the chat. Everyone would love to hear from all of you, your ideas, your thoughts on how the show's going. Additionally, what are some of the things you might like to see from the Trader Talk? Please feel free to put those in the survey comments for us. We read all of that stuff. It comes directly to me and Brent, so we'd love to hear from you if you don't mind taking a moment to offer that up. Brent, another one that got upgraded was Freeport-McMoRan. FCX got upgraded at Citigroup today to buy from neutral. The interesting thing I believe about this one is, where we find FCX. They're again a miner, but notably for copper and gold. The chart does not really resemble that of the, like the mining companies in gold, for example, because what you see here is really kind of a consolidation or a kind of a choppy chart. But Brent, when I'm thinking about it, I go back about to the year here, and I just can't get away from the fact that we just tagged essentially that former downtrend line here. That stands out to a technical trader or a guy who likes to draw a bunch of lines as I do.
Yep. Well, we had to bounce, regardless of how you view it. That's certainly how it worked out in that case, and we bounced off there. Now, I guess a question would be, hey, where are we going from here in terms of shorter term? About, I don't know how many days ago, 15 days ago, we gapped down. Well, the question was, were we going to break up above that gap level? And yeah, right there.
Yep.
And we've actually entered that gap level. Not all gaps fill. It doesn't necessarily mean it's going to fill, but generally, once it starts to fill like that, technical traders would view that as a pretty bullish sign there in the shorter term on FCX, just from a technical standpoint. No, we've broken above all the three moving averages you got here, the 20, 50, 200. And you can just see how big that drop off was on that RSI down in that oversold area. And doesn't mean it can't stay there, but once it starts to come out and then continues to come out and come out and come out, that's showing a lot of strong momentum there.
It's a good move for the stock. It'll be a better move if it can trade through the recent highs. A lot of traders are going to be looking for something like that, I would expect. But an upgrade to that regard stands out. And then I'll have to look at this on the weekly just for some confirmation of detail. And basically what you see is a lot of consolidation over the longer haul. I think it's fair to suggest that it's basically been trading in this 26 to about 53 range or so. I mean, that's kind of the broad thing, but not a shock given the move it made from, the COVID bottom here to the eventual peak. You need time to digest when you make a 900% move, Brent.
Yeah.
Gotta mention that. So not too shabby, right? I mean, it only took 108 bars approximately, and that's on a week. So 108 weeks, about 2 years to make that move. So some consolidation might be in order there on Freeport. So wanted to bring that one up. In the industrial space, Otis also got upgraded, which is interesting because it's not a stock that's it is in industrials, but it's also not exactly in an uptrend of any kind. You could say we've still got a downtrend, long-term downtrend in place, kind of into a gap zone. The news here is the upgrade from Wolf Research to outperform from peer perform, setting a target at 109 on it. Part of a Q3 earnings preview. As you can see, they're coming up here in a little bit. Earnings are going to be on the 29th of October. But Brent, what's interesting here is the strength of that RSI as we run to some levels that we've haven't really broken. But does the RSI maybe tell some traders of the potential for a breakout being more likely than a reversal here?
Yes, I would think so. Also, I would say, when a stock when you have a longer term downtrend, then the question is, when is that going to change? Look, that long term downtrend that's got a ways before we could change that. But in terms of the shorter term, we have a higher high, higher lows. And perhaps I think from a technical standpoint, that's a meaningful change. You know, sometimes you're kind of looking at something and going, well, is it really changing or not? It seems to me, and this isn't an authoritative statement here, because you guys can come to a very different conclusion on this, but that looks like a meaningful change there in terms of the shorter term, possibly a shorter term breakout there. And so we'll see. We've got earnings coming up before too long, which can certainly affect things there. Yeah, there's the longer term, and you can see you know, that's a very long term. We broke the very long term, but the question is, you know, is that going to continue down? And we'll see. But shorter term, I think we're seeing some strength here. You could see that in the RSI as well.
Yeah, you could. And you know, we always say in our events, when we do these in-person events, one of the things that Ben Watson loves to remind us about is the need to look left to confirm right. I find it kind of notable, Brent, that this resistance here at 93 approximately was at one time a prior high, and then it was shy of prior highs in here back in the summer of 23, and we're right back to that level. So it's been resistance, it's been support. Now that we're below it, it becomes a very important level of potential resistance. Got to get back through that. And so if I put that back on the chart, you can see maybe why we're fighting it out at this 92.5. It's a very important level.
Yeah, it is.
But yeah, that is Otis is the elevator company. Some of you were inquiring, so I wanted to make sure we did highlight that. That is who they are. And then the last thing we're going to touch on is another one that's going to be, as we're ready to wrap up here, another one that's actually reporting very shortly here is FedEx, FDX. Now, FedEx is reporting, is usually one of the earlier ones to report. We're not going to hear from them. Oh, excuse me. We already reported on the earnings. I apologize. Back in September. They got downgraded, though, Brent, and the downgrade is from JP Morgan analysts to neutral from overweight with a target that's down, had been 284. They're dropping it to 274. You know, I thought this was notable because it looks like the stock is trying to break the long range downtrend.
Yeah, and I would say, you know, we're down I think I can see that 0.7% or something today.
Yep.
It's taking it okay. I mean, yeah, it's not reacting very well to that, but I would say the drop has come after a pretty strong run up, and from a technical standpoint, it's at this point, it's not like a technical break or anything like that. We've held that 200-day moving average, and so we'll see where it goes from here. A little bit of a pullback. It was kind of in the overbought zone. Not a surprise, I don't think. Maybe at a key level here, we'll see. But I want to say from a trader perspective that that it's that weak at this point either.
Yeah, not quite, but at the same time, not exuberantly bullish. So the fact that we have a chart that's a little questionable, follow on the heels of a downgrade, kind of stands out to me. So I think we got to make note of that. As usual, when we change our time frame, it can help to kind of clarify the trend a little bit. You can see the most recent action here kind of suggests that we've been beaten back from this 245 level a couple of times, and maybe you can see why. It once was support back there, so this 245, 246 could be an important level for Federal Express, FedEx, however you choose to pronounce that one, everyone. So, hey, we are at time, everybody. As always, hopefully a good discussion for all of you. We did tend to be a little more broad today, though, highlighting some of the potential things we got to be paying attention to, but I hope you all got something from it. Brent, as always, love having you on a Wednesday. Really appreciate you doing so. Now, I'm going to be out for a little bit heading into next week. Brent's going to be back next Wednesday for me. Thanks for doing it, Brent, but always appreciate having you here, man. Thanks for doing it.
Hey, thanks, Kev. Great talking to you. With everybody, thanks for joining us. And remember, there's a survey link in the chat there.
Yes, there is. Thanks to Barb for managing the chat and reposting that. Please follow the three of us on X. And if you like the discussion, hit that thumbs up button for us down below. We'll be able to get this one into the archive pretty quickly here. So by the hopefully by lunch, you can revisit and rewatch if you'd like. But that thumbs up will help us in the YouTube algorithm so that we get more attendees, more of our future other traders here maybe get exposed to what we're trying to cover here on Trader Talk. So really appreciate you joining. Have a fantastic Wednesday, everybody. We look forward to catching up with you all again real soon.